The S&P 500, the Nasdaq 100, and the best part of today was seeing another Fed member point out the obvious. An open question whether or not the Fed will have to raise rates again. Now, the main reason here obviously is for the price action, understanding how we're moving throughout the day. You take a little bit of a look, and when we look at specifically ES and Nasdaq, and it's very similar action to kind of what we saw yesterday, right? If you're looking at my thesis, looking at the market right now, it's basically been, I kind of remain bullish based on what's been said from Fed members, Fed speakers, and then also the data, right? Now, I'm not saying the data is great. I'm not saying it's pushing us over the moon. Not what I'm saying. But what I am saying is that the Fed is happy with what's happening based on data, which if we look at previous cases, getting these type of results has led to upside most of the time. And so that's just where I'm at. Okay. So when we look at this action and we look at this move down, right? Early morning, downside, as well as pre-market. Last night, pre-market, early morning, downside, 8, 9 o'clock, bottom out immediately, push back up. Now, again, though, looking at where we're at here, in particular Nasdaq, and Nasdaq is, I think it looks worse than ES. I mean, they both look kind of bad, but we'll talk about that here more. Okay. So what we see here, you break below that line, and then we kind of start illiquid down into 1508, 1501. And then you just stop here, though, right? Not a lot. You go to ES, similar action, some downside, you're bouncing up. You made slightly lower lows than yesterday. Now I go to SPY and give you a visual here. And this is probably the easiest chart to track, and I recommend most of you track this one over ES and even Nasdaq in the short term, because this is kind of the most relevant thing, right? You know, what do we keep talking about? 444. Yesterday, we came right down to the tick. We bounced. Today, we dipped below it. We bounced right back above. You know, the 5-minute chart gives you a little bit of a better visual. You're below it for the better part of 45 minutes of the day. I mean, you even had a continuation pattern here, right here, a descending triangle, which you bounce out of, getting back above 444, and then just chop here for the remainder of the day to the upside. Now, you could argue, and I know everyone's gonna have this argument of like, oh, well, you're bear flagging here. I mean, I don't ever play bear flags at a resistance or at a support, right? What does that mean? So for flagging here, typically what you'd want to see is a flag happen like down here. So you'd like to see that break down, retest, and then push down, right? So you'd like to see the flag like that. So right here, you're just shorting at support, and it's just not a good area, right? Because you've already seen the market react from there. You've already seen buyers show up a few times, okay? And so the action that we're getting here, simply put, not ideal, not great. Because again, to even remain or to trade in a bullish sense, so like trade the upside, right? And I'm going to go somewhere with equities as well here in a second. But before I do, I ask you to do two things. Consider liking, consider subscribing. Helps out the channel tremendously. Also, if you are interested, the Discord link is down below. No pressure whatsoever. We have free education. We have free courses on our website. The Discord is not a course. It's not going to get you rich quick. It's to put you around like-minded individuals, hopefully to give you an edge in the market. You understand why we're trading, what we're looking for, market updates throughout the day, the watch list every single day on the market, the top stocks, etc. Right? That's what it's used for, right? So again, food for thought. So that's where we're at. And so when we look here, you know, especially in ES, and this is why I say like watch SPY, because I'm watching ES, like that's my main focus right now, which is typically is Nasdaq, but ES has been a big focus. You want to get above 45.20, but I mean, now you just got to get back above June 16th highs, right? And when we look at this, it's just so strange. Again, in SPY, there's a disconnect between ES and SPY based on future contract rollovers. That's why I'm watching these levels so much. And Qs are very similar as well with the same type of level, right? You can see that same level there, except you're below it. See, Qs, this is perfect for downside. If I'm looking to trade downside, that's what I want to see. A bear flag, rejecting off the level, push back down. That's textbook. SPY, not so much. Very weird action. And I'm going to tell you why it's moving like this and why you're seeing a disconnect between ES and the Nasdaq and even Dow. Okay. So, and again, this leads back into what I said yesterday. Across the board, you're seeing the reason for this dip. It's not, in my opinion, because of inflation. It's not because of the Fed. It's because of what's happening in China and what they're doing with Apple, right? We saw it yesterday. We saw it again today. They ban it with the government, and then they kind of expand on the bans as well with Apple products. But I just want to say one thing before we like dive too far into anything. If Okay, like if Apple products are one of the few products that pride themselves on privacy and not being tracked, I'm just saying, is it the worst thing? I mean, China's a very big market. It's very, very big, right? It would hurt Apple a lot. But is it kind of hysterical that the communist country that wants to track all of its citizens doesn't like the iPhone? It's kind of comedy. I made a joke this morning saying, if China's economy is already doing this terrible, imagine how much worse they'll do when their whole government's using Androids. Kind of comedy. So understand that. But when we look at the broad market, all jokes aside, right? You saw some, I'm going to show the downside first. You saw like Nvidia gap down, right? But you're still like basically at these levels, at these like support levels. You're down. Don't get me wrong. I want to show the bad ones first. Like Nvidia, Apple are the two bad ones. Gross. And I do want to give you guys a little bit of a viewpoint. We're doing this new thing in Discord called the 30K challenge. And so basically this is like funding an account for like option drops as a whole. And like we have side businesses that we run under option drops as LLC and S Corp. And so we're funding it via that. And we'll go more into that on the other channel, but I just want to go over that right now. Anyways, our first big purchase was some Apple shares, just to let you know. So we'll keep you guys updated. It'll all be in Discord as well. But anyways, give you food for thought there. So Apple, right? Drop down, but immediately from open, you see buyers step in. Okay. And Apple is really getting hit the hardest. But we look deeper across the board. Microsoft, just trending, holding support 330. Meta did get hit by a truck for some reason today, but you're holding again 298, 299. It's been like the story for the past like 7 days. Today you pushed up 307, came back down to like 292. There was no news. I didn't see anything, but yeah, that's what happened there. But still, you're holding pretty solid, right? You're still net green on the day, right? Netflix, you're down 0.5% on the day, holding up. And I just go over this to say one thing is you're seeing these nasty drops on Nasdaq, on ES, but you're seeing no follow through. We're not seeing continuation to the downside. We're not seeing legitimate sellers step into the market like we have been. And so even if I take a step back from my bullish thesis and we just, again, just take a step back, it leads back to the same thesis. Be patient. Stop over trading. I tell you guys every morning, if you follow my Twitter, I give you a watch list every morning. I give you a rundown of the market, right? Same mentality trading here. In and out, no holding for me, especially to the downside, right? Meaning if I'm trading the downside, I'm taking my money and running. Immediately when I get those pushes, I start to exit, trim the position immediately, right? Apple news indexes, except below 444, very concerning, right? So I'm not being biased here. I'm like telling you guys, like if you get below 444, SPY looks terrible. Still here, SPY doesn't look incredible. And then even here on Qs look even worse. So that's how I'm viewing the market here. Again, taking a step back, any scalps really quick, getting in, getting out. I'm not looking to hold anything, right? And you're going to notice through this channel when you're here every single day, you're showing up, you're trying to get a visual on the market, get an edge, right? What I'm constantly doing is you're going to see there's a period always, and this is a bulk of the period where I'm scalping in and out, and then we get a trend break or we get continuation. And that's where you take advantage. That's where you kind of size in longer. That's where you take more contracts. You slowly scale out of them. You let those run. And you'll notice from like March, maybe April into June, fantastic. Clear breakup. It was very easy to trade. From the end of July till basically now, we've been on this like pause type situation, right? Hit the brakes. Just trade what comes to us until we get confirmation, which again for ES is 45.20, Nasdaq closer to like 15.6, roughly there. So that's what I'm looking at there. Okay. And so we have to be able to identify a few things too this goes for both ways, right? So on the bear case here, there's no head and shoulders. I'm gonna tell you that now, but what you are concerned about now is, are you possibly putting in a lower high? That's a real possibility here, right? Are you putting one in, right? So you went here, you bounced up, lower high, went down, bounced up, lower high. It's potentially, right? So if we start to actually bounce here, though, we start to actually get some love, then this would just be confirmed as the trend might be flipping back to the upside, right? Meaning what? You're making higher lows here. So still in the short term, you're making higher lows. So until we get back below like Qs, below 360, There's no reason for concern here, right? And I'm even showing the bearish one here, which is Qs over SPY. I think SPY looks a little bit better, as you can see here. But these are just things that I'm looking at. And these are things you have to be watching. There's a lot of indecision here. And I think there's a lot of, things. I think there's a lot of ways you can lose your money in this case, right? That's why I continue to say, hit the brakes when you need to, hit the gas when you have that opportunity, right? And so right here, that's what we're doing. That's what we're focused on. That's what I'm focused on. I'm not trying to get rich in this chop area where there's indecision, where the volume continues to remain like garbage. Not interested. I'm just not. And you can even see, you have decent volume today, but a lot of the volume came from buying at lows. I'm just telling you, you're not going to like it, and people are going to be like, oh, you're being biased. I'm just telling you the volume and why I think trading here is an utter mistake. A bulk of your volume, you had a lot, first 45 minutes of trading, and then the rest kicked in still to beat out yesterday. So those are things that I'm looking at here, and you have to have concern looking here. Again, though, on the day, some of the other concerning parts. One, the DXY, new local high, still pushing up, higher high. Not good for the market. Number two, yields. A little bit back and forth. Don't love to see this. I like to see kind of balance in between the two, but yields kind of cooled off here. Oil tracking up as well. Pretty concerning. Still really concerning. You need to see oil dip. You just have to. And if it doesn't, you're going to see bad data coming down the line. It just will happen. I don't care what anyone says. CPI, PAPI, PC, they'll all come out bad eventually if oil stays on this path. Understand? You were seeing gold get a little bit of a balance, but gold's still very bearish in my opinion. I've been saying this. You have the complex head and shoulders. You zoom out to like the monthly, the weekly. You can see a triple top here established. It looks like you want to lose your 200 SMA and push back down locally to 1800. Gold doesn't look good. So people are saying that's a hedge. I don't think it is, but do whatever you want. Only hedge, in my opinion, is oil. That's the hedge against inflation, if you're asking me personally. So that's my opinion. That's what I'm looking at. That's how I'm viewing this market and ultimately how I am attacking this market right now. But what I will say, a few things to stay prepared, stay watching, right? ES, short term above 44.6 looks good. You can get above 44.6. You're looking for tracking back into 44.95, giving you a visual of what you'd be looking for on the daily time frame. One, your initial goal would be to at least get back into 44.95. For either case, that's what you're looking for, right? So if you're bearish, you dip down, you're looking for a retest and a push back down. That's your bearish theory. If you're bullish, you're pushing up and you get to 45.20, then you mount. And looking like this type of action here, right? That's what you'd be looking for, okay? Either way, I still have 44.95 in the books. And if you're looking to trade that into tomorrow, you're looking for upside over 44.60. So over 44.60, back to 44.95, 44.90 roughly. Nasdaq, you're a little bit more of a range. You're looking basically back into 15.5 roughly. Key level I'd be watching around 15.35, roughly that zone there. I don't love this action. It's not my favorite. But as I look at this, and again, when you know the action is bad, when you know the action is set up for you to lose, is when the market is mixed. You have names like Amazon, very green on the day. You have names like Apple, pretty red on the day, right? These are both major caps, right? Very big names, biggest names in the market, right? But they're both seesawing opposite directions. Those are times in the market that you are almost guaranteed to lose money. So be careful, take advantage of the opportunities that are in front of you, watch those levels. That's what I'm tracking. See you guys tomorrow. Have a good one, traders.